Hi, this is Zach Meir from Zach's Traders Cafe. We'll look at the major markets on Wednesday, the 14th of September. Starting off with the FTSE 100, where there's been a breakdown below the 50-day moving average at 67.58. While below that, we're looking for a simple destination support test towards 66.15, which was the initial August support. Below that, we're looking at 6400 to 64.50, but at this stage, probably not worth getting more negative than a 66.15 August support test. Onto the DAX, and situation here a little bit more volatile in terms of what we've been seeing over the last few sessions. Gap to the downside, an island top, double island top in fact, or double top island reversal. Bounce off the 50-day moving average so far at 10,375. Basically this is the second session that we've done that. While we're above that, we might see an attempt to fill the gap up to 10,539, but otherwise we have the risk of a test towards the 200-day moving average, now actually falling at 10,034. So very interesting setup there. Probably interesting on both sides in the sense that if we break down, it'll be sharp, and if we rebound, it will also catch people off guard after the gap to the downside. For the US markets, which are allegedly the source of some of the European woes, we've got what we've seen previously on the more volatile times in the market. We have the down day, the up day, the down day again. The conclusion of all that is really that while we're above 18,000, we regard the Dow as being a dip situation, buy on the dips. But below that, on an end-of-day close basis, the risk is for a dive towards 17,569, which is the 200-day moving average level. This stage, only back above the 50-day moving average at 18,423 would really delay the breakdown, or at least the dip scenario that we might see over the next 2 to 4 weeks. For the S&P, similar configuration as you might expect. The down, the up, and then the down. That low print there, 21.19, end of day close below that. Risks taking this market down as far as 20.57. Don't really see much support for this market between the 21.20 zone and then back down towards 20.50. For the Nasdaq, which has been the stronger of the three main US markets, had a rebound off the 50-day moving average at 47.14, and really while we're above that, might be worth buying dips for a retest of the 47.76 10-day moving average area, or even up to fill the gap down to 47.91 made last week. Otherwise, below the 50-day moving average, we're looking at targets towards 45.20, which was initial June resistance. For the currencies, we've got cable looking at a little bit weaker than it has in recent sessions, but still above the 50-day moving average at 131.56, at least while we're above that on an end-of-day close, 131.50-ish towards 135 is the expected range for this market over the rest of September. For the euro, I suggested that the cross has died a death, and that still seems to be the situation now, holding us towards the 10-day moving average at 112.14. At least while we're above that, we could head up towards 113.25, which is the top of the August converging or August triangle formation. Otherwise, it's the main 111.50 support zone where the 50 and 200-day moving averages are. On to the situation of dollar yen, where there's the hope that we'll see at the Bank of Japan lower interest rates again. Uptrend line here from the middle of August, and a resistance line down from July. The view at the moment is that one should probably wait for a break outside those two parameters before deciding which way to trade. Otherwise, trade that range between 101.50 and 103.50, with the high today 103.35. So that's underlining the triangle nature of this market. RSI 52, so the upside is just about on the bias here at this stage. Finishing off with gold, and here we've got a situation where there's been a bounce off the floor of this triangle formation here from the beginning of the year or earlier part of this year, running through the 1325 area, 1325 to 1350, the current range between these two trend lines. Wait for a break of that. If you're an aggressive trader, you could go long on an end-of-day close above the 50-day moving average at 1335. That's it from me. More updates at the same time tomorrow.